the template determines how the loan will behave. Let's take a look at how we can set up the template. So we come to the loans and properties menus and we choose template. Now if you take a look at it, we have got one template there which is basically all loans, and you have got various parameters, and then you can go to the options and you can see how it will behave, and then you have got the general ledger accounts which will be debited and credited when various functions related to the loan take. Let's set up a new template, and we will call this template mortgages, and we'll use it all mortgages. We will use it to describe all the mortgage loans. These loans are given in cash, which means that the borrower is paid the money. Some loans could be in kind. For example, if you have if you are a government selling land to the public, then the land becomes a commodity that you are selling, and therefore you will have to give your asset value there. If you've got cash, you'll have to give the bank. That will be credited when the loan is granted. The billing frequency is the frequency with which the interest is calculated. Most of the times it is monthly, but it could be term, which means that you calculate interest at the end of the term, or it could be daily, weekly, bi-weekly, but we will leave it monthly. That's the default. Similarly, the borrower will pay the interest on monthly basis. It could be they could pay at the end, or daily, or weekly, but most of the times they pay it on monthly basis. Cindy uses various calculation methods. For example, you could have a 360-day year, in which case you calculate the interest for the entire year and divide it by 360 to calculate the daily interest, and then you multiply it by the number of days between the last calculation date and the current calculation date, and that will give you the interest for that duration. Similarly, you could have a 365-day calendar or exact year, in which case you have got 365 days, and in the leap year you have 366 days. However, mostly mortgages are based on 12-month year, which means you calculate the interest for the whole year and divide it by 12. Default billing date is the day on which you calculate the interest. If you keep it as 0, then the interest is calculated on the day of the month when the loan was initially given. For example, if the loan was given on the 7th of the month, then you calculate the interest on every 7th of the month, so that you have divided it in equal monthly installments. In most companies, they would calculate the interest on the last day of the month, and if that is the case, then you put 31. So what is going to happen is that if the loan was given, say, on the 15th of the month, then in the first month it will calculate the interest from the 15th to 31st, and then after that it will calculate it for every month. The default payment type, it could be interest only, or it could be blended. In certain loans, you don't want the borrower to pay the principal until the end of the term, and in the meantime they have to keep paying the interest only on monthly basis. However, as far as these mortgages are concerned, it is basically blended, so that the borrower will be paying a portion of the principal as well as the interest, and their monthly payment will always be constant. Are loans linked to properties? Oh yeah, these are mortgages, so they are linked to real estate properties. There could be residential mortgages, or commercial mortgages, or it could be an empty lot where the developer is going to build a high rise, And no, this is not the default template, because most of the loans, they come in a different category, and therefore we will not use that. Okay, so this was your come to the options. These are various parameters. For example, if a borrower has paid the monthly installment, but that check is returned by the bank, then you can put a code there, and these codes come under the deduction codes, where you are charging, for example, $150 on top of that, or any amount on top of that. So let us say, for example, we already have a deduction code called NSF, and we will learn how to set them up in a separate tutorial, and that's it. Go to the accounts and loan receivable account, so that when you give the loan initially to the borrower, it will debit the loan receivable, which will be principal only, and this is your loan receivable. These general ledger accounts have been set up separately, and we will learn in a different tutorial how to set them up. And so you are debiting loan receivable and you are crediting bank. Go there, and this is the bank that we are going to use. Now when you receive the money from the borrower on monthly basis, then you debit it to the bank, and you credit it to accounts receivable, and accounts receivable is 1100 here, so you credit it there. Now how is the money debited to accounts receivable? We will see it here in billing. Every month when you calculate it, it debits it to the accounts receivable, and when you receive the money, it will credit the accounts receivable. And so that's where this pair is being used. When you run billing, it debits this account, which is accounts receivable. It credits loan receivable, which was set up initially when you set up the loan, and the interest portion will be credited to, say, interest income, which should be a 4,000. Here it is, 4,000 account, 4220. You also give the bad debt expense, because sometimes if there's a foreclosure or the borrower goes bankrupt, they might not be able to pay, and you might have to debit it to your bad debt expense. That will be an expense, and it is account number 5,000. Okay, so we have set up a new template. Just simply say add. The template has been set up. Now what are the ramifications of that? The ramification is that if you come out, and let's go to the loan, and let us take a look at test. This was the loan that we have set up initially. Now what we are going to do, we will change the template. Now notice that you have got 1, 2, 3, 4, 5, 6 tabs here. Okay, if you change it to mortgages, then it adds one more tab there, which is the property, and it is expecting that you will give the property details. We will learn in a separate tutorial how to set up properties.